Hey, listeners. Today I had on Ryan Watkins, who's the co-founder of a crypto-focused hedge fund called Syncracy Capital. Syncracy hangs its hat on taking long-term bets on the tokens it buys, and one of those tokens is Solana. So Ryan and I talked about his updated Solana thesis, which gets into a lot of the app activity on the network. We also talk about the rise of AI agents, Hyperliquid, and some of his spicy takes on Bitcoin, which I really enjoyed. Ryan was a very thoughtful guest, and I'm excited for you all to hear the conversation. We'll get into it right after this. This episode is brought to you by Renaud Partners, the premier go-to-market advisory firm for early-stage crypto teams. Thanks to them for making this episode possible. Hey, Lightspeed listeners, we need your help. Lightspeed is conducting an audience survey to help us get a better picture of who our listeners are and what you want to see from the show. Think of this as our annual review. What do you like about the show? What could we improve on? If you want to contribute, visit the link in our show notes to fill out the survey and help us make a better show for you. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today by Ryan Watkins, the co-founder of Syncracy Capital, a hedge fund that's very crypto native. They're pretty into Solana as well. Ryan, thanks for coming back on the show.
Yeah, thanks for having me back on.
So I was looking, and your last Lightspeed episode came out on January 16th of 2024. Today is January 9th. It may come out within a couple of days, but I was thinking that it's kind of fun because back then you came on to talk about a Solana thesis that you had put out, and now nearly 1 year to the day later, you're back to talk about another Solana thesis that you put out. So cool full circle moment having you back on the pod. Different host, but kind of same concept here.
Yeah, no, I'm really happy to do this as well. I think that I wasn't expecting to write another Solana thesis. I thought that the first one just explained everything that needed to be known about Solana, at least from our perspective. But what's changed is I think the data has progressed so rapidly and so far what I originally imagined that it just felt necessary to give an update. And I also appreciate how I think at least on the buy side, there's just significantly less updates to investors' theses. And I think that's like a really big opportunity to really just tell the story not once, but on a continuous basis and show people how you're continuing to re-underwrite the thesis.
Yeah, I'm glad you brought that up actually, because I was reading through both of these theses before we got on the call here. And I think that's exactly right. Your first Solana thesis was very forward-looking, explaining the architecture of Solana, sort of theoretically why it could be the fastest horse rising from the ashes, I think you put it. And this newest Solana thesis, which came out, I believe, late November, December, something like that, is just looking at the data and saying, look at how Solana's apps, usage, on-chain volume, all these sorts of things have surpassed Ethereum's layer one over the past year. So like it's a bit of a victory lap almost on your first thesis, just saying, hey, look, like we said this would happen and now it has.
Yeah. Yeah. I think I've just been, like I said, I think I was so impressed by how fast the data has progressed. And when we originally were underwriting Solana, and this is the case for many L1s when you're underwriting them before they take off, is you're really just betting on potential. You're making a call on the chain architecture, you're making a call on the developer ecosystem, and that's really it, right? I mean, you can also factor in, some fractal of maybe how Ethereum did post ICO boom, and that can help inform the potential for this. But that's really how you're framing the thesis, and that's what we did. And the difference now is that, and I think why this is really appealing, especially even to investors beyond kind of more crypto native people now, is that there's tangible data that you can use to underwrite the Solana thesis and also justify how it's undervalued relatively to the rest of the field. And that's really what we want to highlight here, is that this is no longer a thesis that requires you to have some understanding of distributed systems or have like these weird theories about evaluations. I mean, it's just all the data is in front of you to make that decision.
Yeah. So Maybe just to set the table for the conversation that we want to have, what is your updated Solana thesis as you see it today?
Yeah, sure. I think it can almost be captured in the first tagline we have in the thesis, which is follow the data, follow the money. And what we see now is that early on, there was this idea that Solana could not accrue any value because, I mean, it sounds ridiculous now, but cannot accrue any value because its fees were too low. And what we see already, and mind you, the amount of activity that is on chain today is still a rounding error in the global scheme of finance. And even still, you're starting to see meaningful fee generation through increasing the volumes of the chain while keeping fees low. And if you look at Solana today relative to the field, in November, it eclipsed 51% of all fees on all blockchains. And that's not just Ethereum, that is like all blockchains, all the smart contract platforms in the ecosystem. So what it's really starting to look like is that Solana is running away with it, right? I mean, it's just dominating everyone else across every single metric that you would deem relevant to underwriting a smart contract platform, whether it be the amount of fees the entire system is generating, a combination of transaction fees and MEV, whether it be the total revenue of the applications on it, which once again is another metric that I feel like is extremely hard to game and extremely fundamental to the system, because at the end of the day, these are platforms, right? Solana is only useful if people are using applications on top of it. And these applications on top of it, the best way to understand if they're useful is if people are paying to use it. And these applications are generating the most revenue across all the ecosystems in the industry. Once again, another, like, I think, surprising thing, if you just looked at this a year ago, that you would not have expected. Stablecoin volumes. There's a lot of people sending money back and forth, right? DEX volumes. A lot of people trading on Solana, more so than any other chain. And when you just look at all these metrics, you start to realize that at the end of the day, what do blockchains do at their core? They are useful for sending and exchanging, or basically just moving assets around and then enforcing the contractual relationships between them. And if you look at all these metrics that are basically derivative of moving assets around and enforcing the contractual relations between them, Solana is in the lead in probably 90% of them. So once again, at this point, what is the argument against why this shouldn't be the number one smart contract platform if almost all the data points towards that? And I felt like I was going a bit insane looking at this data over that period in Q4 when we were writing this updated thesis, because it just seems so glaringly obvious, almost in the same way that Ethereum seemed very obvious back in 2020, 2021, when I was looking at the data on chain, seeing that the transaction volumes were surpassing Bitcoin and in fact going parabolic because of the DeFi activity, because of stablecoin activity. Yet in comparison to Bitcoin, this was just valued so far below Bitcoin. And I was just thinking to myself, well, this seems like the emergence of an actual on-chain economy in comparison to Bitcoin, which is just like this ledger to move Bitcoin back and forth. And I thought that was just underpriced. And this is the very similar feeling I have right now with Solana.
One chart that was really interesting in your piece was showing, I think, the fastest protocols to 100 million in fees or something like this. And Pump.Fund was by far the fastest ever. And, we talk about real economic value, which Dan Smith from Blockworks kind of helped pioneer as a thing that we measure. We talk less on this show, I think, about app revenue and fees. So when you see, Pump.Fund brought in hundreds of millions in revenue, why does that matter? What's the significance of that in the crypto economic context?
Yeah, I think there's a couple reasons. First and foremost, they're a very powerful signal to builders is the opportunity to make money. And there's two ways of doing that. One is through capital appreciation, like you launch a token and that token reaches a high market capitalization. And then the other way is through income, like you just create a protocol on chain and it generates income. And Solana has both, but I think the one that is more important is the income, because that shows you that there's the Solana as a chain and the applications ecosystem are servicing real end user demand. And I think the signal that Pump sends is that you can build. Also, the Pump team is fairly young as well. I mean, you can be like someone who's 19 years old or whatever. I actually don't know how young those guys are, and you can build a leading product on a blockchain and make like hundreds of millions of dollars in 1 year. I think that's like extremely compelling. Now, the second component of this is, what is the substance of a pump, right? There's all this criticism about meme coins and is it useful or not. And what I'm starting to see with Pump is that, in a way, once again, going back to the original idea I shared earlier, how at their core, what blockchains do are move assets around and enforce contractual relations between them. Well, what is another key building block here? In order to do that, you need to have assets on chain. And Pump is a basic platform for just issuing a ton of assets, right? The easiest assets to create are meme coins because they don't need to do anything, right? They're funny. There's an image, and that's pretty much it. And that's why that's the demand that Pump was serving at first. What we started to see over the past 3 months is that Pump is now also starting to be used for more legitimate projects. And you start to look at the AI agent sector. At first, on the surface, many of these resembled meme coins because they were launched on Pump, and that's what Pump has been used for historically. And then you realize that, wait, hold up. The team behind AI16Z and Eliza has been working on this for many months in advance, and they're building legitimate AI infrastructure. And there's a couple examples that are like this, where teams are just using Pump as this platform to fair launch their token, get into the hands of the community at the ground level, and go from there. And that, to me, is what is the significance of Pump, is that it is now like this fair launch platform. Yes, mainly for memes, but now also for legitimate projects as well that are starting to take this route.
Everybody knows there's a massive shortage of top senior marketers in crypto, and teams are constantly struggling to get their go-to-market done right. Renaud Partners is the premier go-to-market advisory firm for early-stage crypto teams. They help top founders tell their stories better and build great non-technical teams. They advise founders on all things marketing, tight brand positioning, community building, social media, and building A+ internal teams. They work with some of the top projects across Solana, Monad, Ton, Base, and others. Renaud Partners has built the most elite network of native crypto marketers globally. They create custom expert teams to support founders with transformative strategy work. Some of the best founders, VC firms, and ecosystem leaders in the business trust Renaud Partners to help their teams expedite their marketing success and catalyze their growth. If you're a founder or a VC looking for support for your teams, I highly recommend connecting with them. You can learn more at RenaudPartners.com. I'm glad you brought that up, where you sort of define the utility of crypto as moving assets around, enforcing the contractual relations between them, I think is the way you phrased it. And something you kind of grapple with in the piece is like, yeah, right now, a lot of the activity on Solana is trading meme coins. Elsewhere, you've said that DePIN, decentralized physical infrastructure like Helium, building this decentralized cellular wireless network, also would fall under that categorization. So I don't know, what to you is the trade-off between what we would see as maybe unserious use cases like meme coin trading versus DePIN, which looks to fulfill kind of real-world infrastructure needs?
I don't think it's a trade-off. It's a trade-off if block space is limited, but I get the sense that Solana's philosophy is one of abundance. We want to create an abundance of block space so that we can run whatever applications we want. And like I said, the meme coins are just a very easy first use case for a chain that enables you to create and trade assets very cheaply and very fast. But it's not the only use case. And in fact, once again, going back to that framework of moving assets around and forcing the contractual relations between them, in many ways, what DePINs are markets for physical and digital resources. And they're leveraging that same functionality of blockchain, which is to move assets around and force contractual relationships in order to create these new ways of building out these infrastructure networks. And this underlying infrastructure, like I said, for sending assets, for trading assets, on the surface right now, it is powering a lot of these more speculative use cases. But in parallel, underneath, this infrastructure is really starting to solidify itself as a premier place to do this. And it's starting to compound over time as well. And also, it's starting to become, I think, proportionally less speculative over time. And that's totally fine. I think that the history of this entire thing we're doing in crypto is speculation preceding utility. I mean, even Bitcoin, what was Bitcoin back in 2011, 2014, all these previous cycles before we had BlackRock sending it to their clients? In a way, it was just a way to get rich, right? I mean, was anyone sending Bitcoin around the world to do anything substantive? Was anyone buying Bitcoin because they thought it was a good store of value? No, it was like a speculative bet that this could be something in the future. And same thing with Ethereum and DeFi Summer. Like, sure, you had the Uniswaps of the world and Compound, and these are all foundational primitives that people still use today. What you also had is a ton of speculative, like, yield farming that drove so much of the activity last cycle. And I don't think it's any different here. And I think it's really important that we, stress test this infrastructure and just make sure that it is functional, because it's meme coins today, but tomorrow we could be running the entire global financial system on here. And I would hope by the time we actually put important stuff on these chains, this stuff is not breaking. And because that would be very catastrophic when you're going to pay for a coffee, or you're trying to settle a transaction for like exchange for like a stock, and it's just not working. Like, it's just down, or there's like hacks or anything like that. So I think this is really important stuff that that we're just all experimenting with the core functionality of the chain.
Mm-hmm. And then let's cast this into the future a little bit, because something I've been thinking about recently is, the past 6-8 months, as long as I've been writing this Solana newsletter, pump.fun has just been inevitable. There could be a controversy. It could take down live streaming and get this UK warning from the UK financial regulator, whatever. Pump.fun has just continued to be up and to the right the whole time. It continues to be the biggest Solana app, where much of this revenue derives from. New things like AI agents are launching on Pump.fun. They're doing DeSci there now. Everything that seems to just be the focal point. In 2025, do you think that changes, or do you think that Pump.fun is just going to continue to be the platform? Or if you had to build a world where a different app became the number one Solana app, what would that look like to you?
I'm not sure if it continues to be the number one platform. It very well could be. I do think that the number one platform on any chain, for that matter, will likely be one that facilitates speculation. And what that could be, and maybe this is just us being prisoners of the moment, is that the next platform that becomes the number one platform on Solana is one for launching AI agents. And it's their own, verticalized infrastructure for doing that, rather than using Pump. And one way to think about this trend is that what people are doing here is, and granted, this entire sector is 2 months old at this point. It's very early stage. I mean, we went from someone connecting a fine-tuned LLM to Twitter and claiming some meme coin that someone created for it, to now agents running in TEEs and autonomously transacting on chain from private keys and connecting to all social media platforms. So the rate of change here is quite fast. And mind you, also, we get to ride the coattails of all these larger AI companies like OpenAI that are developing more advanced models. And what does this look like when instead of just using the current generation of LLMs, we're now using O3 with more advanced reasoning, and how might that change what we're building here on chain? But I really think that at the core, what is really interesting here is that the agent platforms are, and this is how it ties back to this whole pump and speculation thing. It's a way of financializing these agents, and in a way like IPOing an agent on a blockchain. And that is something you cannot do in the traditional world. So the fact that you can financialize these agents, distribute ownership of these agents, and then also enable these agents to coordinate on chain and enter contracts with each other without any intermediaries, I think it is very fascinating. And I wonder what people could build there. So all to say, I think that this could be the next iteration of what this speculation on chain looks like. And one way I think that is also a way of framing it, I think was pretty compelling, that Hasib from Dragonfly Coin is, in a way, meme coins are like financial nihilism, and the AI agents are financial optimism. And I think in the long term, optimism will win.
Yeah, that's a good little tweet. Good job, Hasib. I hadn't seen that. I tend to fall along the same lines that AI agents might be the next thing. And I guess since we're talking about it, since we opened the can of worms, Ryan, you tweet a lot about AI agents. You were into them quite early with virtuals on Base. What do you see out there? There's obviously a lot of noise. How much signal is there, and who do you kind of see winning this trend long term?
Yeah, like I said before, it's a very early stage sector, and if you look at it for what it is today, you may be disappointed with the current state of things. But like I said, it is progressing extremely fast, both on an idiosyncratic basis and then on a more global basis. You get to ride the coattails of the larger AI companies as well, which will provide, basically in a way, the infrastructures that we can also build more performant agents and agent platforms. So right now, it almost is a similar bet to making, or a bet that you need to make on an L1, where you're betting on potential rather than necessarily traction. So what we want to look at is the developer ecosystems for these different agent frameworks, platforms, whatever you want to call it. And that can be a signal amongst all the noise where at this point, I mean, that I look at this stuff every day. I mean, there's so many platforms and frameworks that are coming out, all these different gimmicks of, oh, we have a framework in this language. Oh, well, with our platform, we can do X, Y, Z. And at a certain point, it just starts to become very noisy. And you have to laser in on what actually matters here. And for me, I think it really is just where are the developers building on right now? I think is really the only question that matters when you're so early stage. And yeah, that's really how we're thinking about it. Once again, it's just very early stage, and just want to focus on what are developers doing, and hopefully, like I said, we could just continue to see the progress ramp up.
And you run a hedge fund, and I know a lot of listeners to this show are probably trading AI agents and stuff. So just as a trader, when you put on your trader mindset, how do you think about the current AI agent trend?
I think it's starting to get saturated. 2-3 months ago, there was a general consensus that these were all meme coins. In fact, I was very much in that camp back in October, that most of these were meme coins, and eventually flipped, shortly after, when I started to see that at the very least, even if these are meme coins, you can own the platforms for creating these new meme coins, and then later learn that, maybe these aren't all meme coins. There is some kernel of truth here that these could be important down the road. And I think where I'm at now is that the easy trade is likely behind us, where you can just buy all these it literally didn't matter what you bought. I mean, I've just heard so many stories anecdotally of, oh, I bought XYZ and I bought ABC and everyone just made 5X. It didn't even matter because the entire sector was just re-rating. And while I still think there's extremely strong sector tailwinds, I do think that now it will pay to be more discerning on where you're putting your money into. And for me, that means consolidating more into the winners of the world, like the AI 16Zs and virtuals that are demonstrably leading this entire movement.
I also want to just get a little bit more generally into what you do at Syncracy, because you're part of like we'll call it small but growing group of hedge funds, holding companies that are like dedicated to investing in Solana in part. I think Joe McCann from Asymmetric comes to mind in that category. Soul Strategies has been doing some interesting things there. So just as like an introduction to what you all do, like what is Syncracy's kind of investing thesis in the hedge fund world? Because I think it's a bit unique. So I'd be curious to hear you talk about that.
Yeah, sure. When we first started Syncracy, or first started, I guess, fundraising and ideating on Syncracy at the end of 2021, we saw two opportunities. One is that public markets, there were this open frontier where there really wasn't many dedicated players here, at least that were investing fundamentally. And that alone created a white space opportunity to build an important business here. And then two, within public markets, we were starting to see the early signs of long-term winners emerging in select sectors. And you could potentially have the opportunity to buy these in the bear market down 80, 90%. And in fact, get more attractive risk reward on these generational winners, the next fangs of the crypto economy, than you would attempting to buy or invest in another, L1 or whatever that is early stage in venture. And that was the thesis. And I think since then, because at that point it was more an idea. I think at this point we started to see this validated. One way that we've seen this validated is, quite frankly, with Solana, where it was a thesis that there would be more than two winners beyond Bitcoin and Ethereum that had these big, cent to billion dollar outcomes. I think Solana was one of the first, and I don't think it's the last. And in fact, I think that there will be other big winners that aren't L1s as well, particularly in like applications that are on these platforms. And that's really what we want to focus on, because one thing that I've always found very fascinating about many of these leaders in this asset class is there's not many that can do this. But the rare ones, when you find them, these things compound and the returns can be extraordinary if you can nail one of these right. And ideally, you can hold these for a very long time. And what excites me too is that the TAMs that some of these projects are playing in, I mean, you're talking about some of the largest TAMs in the world, and these are like winners take most markets. And because these protocols are border agnostic, right? These aren't limited to any region. There's no such thing as a regional DeFi protocol or a regional DPIN. You have the opportunity to to capture that global TAM, not just a regional TAM. So you can get these really big outcomes. These outcomes can happen, or at least can get priced in very, very, very fast. Because this asset class is just so speculative and early stage, and that's what really gets us, super excited about this opportunity.
You've mentioned that Solana is kind of one of these long positions you've taken. I'm curious just to get into some of the competitive dynamics between ecosystems, because you said that not everything is zero sum, but I don't know, in the long term, like if Solana is going to succeed, is that going to be at the expense of Ethereum, Hyperliquid, other sorts of competitors? Or I don't know, how do those competitive dynamics sort of play out in your view?
Yeah. So this is another part of the Solana thesis part two. We talked about the data up front. And then the second part of it is how, the way we frame it is how Solana is a compounding digital superstructure. And what does that mean? It takes this idea of how code is it's like Lego blocks, and over time, as people build protocols on top of, say Solana, it resembles a superstructure that, in totality, is a global financial system, even though individually they might be an individual financial protocol, and it compounds over time because the more Lego blocks that get added to the superstructure, the greater the overall product can be. And there's network effects to this as well, right? So as you onboard more assets and more applications and more businesses and more users, it becomes much more difficult for an upstart ecosystem, even with the same technology, to compete. Because why would you? If someone were to fork Solana today, and this fork Solana has 100 validators and no assets on it and no users, why the hell would anyone want to build there? No one would want to do that. It'd be ridiculous to do it. People build on Solana. Why? Yes, to an extent because of the functionality of the system, but it's also because of, like I said, like the kind of network of like this intricate web of assets and applications and businesses and users and infrastructure providers that are all working together to make this work. And that starts to matter more as time goes on, rather than any technical advantages that the system might have, because this is how you actually build a defensible moat from someone that may eventually come along and offer a product that is 2 times better than Solana, because maybe it's a little bit faster, a little bit lower latency, but it doesn't really matter because, once again, like, you just don't have that network there. One thing I'll add too is that, because you also asked the question about whether this is winner take all long term or winner take most, and it's an open question. In our view, it is definitely not going to be a fragmented sector. The question is how many winners there will be. Is it just one, or is it just a small handful? We're more likely to camp that it's a small handful, and that there may ultimately be a set of trade-offs that exist in the smart contract platform landscape that prevent a single system from encapsulating all use cases possible. And then there's also a degree of path dependency as well, where maybe if we were to all do this from scratch and decide to all build on Solana from the beginning, it could just be the one that wins everything. But the reality is that there's just so much stuff happening in parallel. And maybe what that creates is just a world where, because these are building in parallel and they both got the flywheels, that long term, maybe it is just Solana and Ethereum that are both successful, right? So yeah, that's kind of how I loosely think about the market structure long term, and then how these systems differentiate themselves and defend from competition on a long-term basis.
Do you think it's possible to, or do you think crypto is going to reach a point of no return with layer ones where Solana or Ethereum or a layer 2 or something becomes like the default operating system, where if you're going to build an app, you're going to do it here because it has all of the developers, the support, the assets? Or do you think just for as long as crypto goes, new layer ones will be coming to market? Or do we just get to a world where it's, if you want to build in crypto, you're building an app on the layer 1 that is, kind of raced ahead of all the others?
Yeah, that's a good question. It's not clear today whether there is this novel chain architecture that no one is thinking about today that could change everything and be a nice complement to the existing smart contract platforms, or even a disruptor to it. It certainly is a possibility, and we're looking for that if it's out there. My sense is that one attribute of blockchains that has always excited me is this idea of grassroots open source participation, and how that may ultimately lead to these systems becoming more resilient and more open to and more dynamic over time. And what I mean by that is because it's not just a small group of people that control all the decisions and can, quite frankly, get lazy over time because they're so successful. And there's always going to be fresh blood that comes into these ecosystems that have fresh ideas, and it's all open source. You can always incorporate the best of something new or something old. There's some sense that you can kind of maintain this lead and incorporate all these new innovations over time. It's to be determined. I mean, this was always the thesis that the Bitcoiners had, is that, oh, well, this Ethereum stuff is nonsense, but if it works, then we can all bring it back to Bitcoin. And we're starting to see that experimentation play out already, where, the Bitcoiners faded all the stuff that's happening in Ethereum. And what is happening now? People are building L2s on Bitcoin because they're like, well, we need to actually scale this and get the transaction fees up long term and find more ways to utilize Bitcoin on chain and just bring more utility to Bitcoin, the asset. And we'll see if that actually creates a compelling alternative to Ethereum and Solana long term. It's to be determined. That is something that I do think about is, once again, like how does this grassroots open source community change the competitiveness of these systems long term when there's always fresh blood coming into these ecosystems?
What do you think of Bitcoin and the kind of burgeoning Bitcoin layer 2 ecosystem as an aside? Like you spoke earlier about Ethereum as sort of this improvement on Bitcoin because it could run as like the world computer, and then Solana maybe does certain things better than Ethereum does. Are you still interested in Bitcoin, or what's your take on the asset and the new experimentation that's sort of happening there?
I'm very skeptical of this experimentation. I don't think Bitcoin is a great platform for building more complex applications for a number of reasons, ranging from the expressiveness of the system to the scalability of it. I mean, there's just even just like the culture of Bitcoin that can be, and a limiting factor on how big this ecosystem can get. That being said, I don't know how much it needs this ecosystem to work out for the foreseeable future to be successful, because it's just found product market fit for a handful of reasons, in part because it's first, in part because it's adopt this philosophy of minimizing changes and this being this dumb pet rock that just doesn't change, is that it's found product market fit as this digital gold, and that is what people are eating up, including in TradFi. Like they're buying to the thesis that it's digital gold, and digital gold doesn't really need to do anything. It needs to not change and just be safe to use, right? As far as what this looks like long term, I've always had the thesis that, and I wrote about this in a piece that preceded the Solana Thesis Part 2, where I talk about value accrual for applications and value accrual for blockchains. Long term, I do think that smart contract platforms and Bitcoin are competing with each other. And if you look at these systems on a fundamental level, smart contract platforms and Bitcoin are not too dissimilar, right? Each provide a system of property rights for the assets that are issued on top. For Bitcoin, it's just Bitcoin. For other blockchains, it's all the other assets that are on top of them. They each issue a cryptocurrency along a deterministic supply curve. You can send all these assets around the world without any intermediaries and instantly. And then you can verify as an end user that this supply is what it is, and that what happened is correct, like in the past. So in the abstract, these are kind of the same, and the base assets are kind of the same too. And I think that matters in the long term, right? Like I don't think that this narrative that Bitcoin is just different is going to persist forever. And when you look at this long term and you see that, I mean, there's this part of me that thinks that this should be obvious, that whatever blockchain has the most economic activity denominated in its own base asset should probably be the most valuable blockchain in the world. I don't think that's like a controversial statement, but for whatever reason, that just seems like it's non-consensus when people are looking at Bitcoin versus the rest of the field. And the difference with Bitcoin is that, well, there's no Bitcoin-denominated economic activity happening on Bitcoin because you can't build anything on top of Bitcoin. And I start to wonder long-term as the world shifts to a more digital economy and more of commerce and finance moves over to these blockchain substrates, if Bitcoin failing to capture this activity is a critical misstep. And it persists as this digital gold asset, but the biggest prize is actually being the internet money that is the foundation of all this digital activity that blockchains are going to facilitate. And that is, I think, the challenge Bitcoin has long term, even if for the future, it is by far and away the one that is in the lead and has product market fit, and is maybe the only one that you can say is a non-sovereign store of value in the traditional sense.
This is a spicy take, Ryan. I appreciate it. I couldn't Bitcoin just be Bitcoin, though? And it's this thing that runs on proof of work, which no one really uses anymore, or like that all the new chains have left that behind, and it's chasing this digital gold narrative, which it's unchallenged in. Nobody else really wants to be digital gold. And so can't like Bitcoin just exist for your crazy grandpa who thinks that, you know, the dollar has been fake since we left the gold standard, and then like the smart contract platforms are just their own thing and they're not really competing in the same category? Because I think you can make the argument that it's winner take all, winner take most among smart contract blockchains, but I just think I feel like there's an argument to be made that Bitcoin is just a different thing entirely, and it's almost weird to lump them together.
It could be. It definitely could be. But the question I ask is whether, like, the thing about this is how will people interact with Bitcoin if we think about this on a 5-10 year horizon, right? Because the Bitcoin blockchain does not scale, right? You can do 7 transactions per second, and you're talking about the entire world, like every person in the world using Bitcoin. I mean, it just doesn't work on chain. Like the math doesn't work. So I think what actually happens, especially because you cannot build any complex applications on Bitcoin because of its limited programming language, is that you end up interacting with Bitcoin entirely through intermediaries, both because it is too expensive to use the chain for the average person, and 2, because it is just simply not scalable enough to handle billions of people using Bitcoin every day. So what is happening is you have banks that are built on top of Bitcoin that basically service all end user demands to use Bitcoin. And you know what? That could be fine, right? Maybe what matters most for Bitcoin is not that end users can directly interact with the chain. What matters most is that they can verify the supply of this asset and know that it's scarce. And the blockchain itself does not change and it's secure. And that may be all we need for this monetary revolution that Bitcoin aims to spearhead. But there's also a world where people would rather directly interact with a blockchain and would want to engage in financial activity without intermediaries and do not just one transaction per day, but thousands of transactions per day or millions of transactions per day. And there's agents that are also using this financial system that also want to do these transactions per day. And you know what system seems like it's better equipped to handle that, which seems like the more logical system for the future? it's probably Solana or Ethereum or whatever other smart contract platform that could come out that could service that. And that is the open question long term. If we're really just getting just like 10, 20-year horizon, meditating on what this all looks like. So yeah, and in that world, then maybe Bitcoin is not the largest, but it's still important. It's just not the largest. And I think that's a fine outcome. Listen, like if Bitcoin's still worth trillions of dollars and then one of these other blockchains is worth trillions of dollars more, I think everyone's here is still happy, except for the people who thought that it's Bitcoin only. But those people were wrong for a very long time.
One thing that I wanted to get into that I've seen you posting about recently, and I haven't seen you post about a lot of alternative layer ones outside of Solana, is Hyperliquid. You're a Hyperliquid fan. Tell me why.
Yeah, so Syncracy owns both Sol and Hype, and this is for full disclosure. Hyperliquid is interesting for a handful of reasons. One of the hardest things to do in this industry is achieve product market fit. There's countless projects, especially smart contract platforms and exchanges, that have claimed to solve this great theoretical problem that will enable them to build the best exchange in the world or best smart contract in the world. And it launches, and even if it does work, no one uses it, right? The difference with Hyperliquid is that it followed, there was this really, I think, prescient article that Jesse Walden wrote from Variant about progressive decentralization. And basically what Hyperliquid did is effectively follow that playbook where you start first by getting product market fit. Let's just build an exchange that people love to use. And today it's doing maybe 7 to 10% of Binance's daily volume on perpetual swaps, and it's getting a ton of fees. Now, what is the next step? Once you achieve product market fit, the next step is you get the community involved, right? And how do you do that? Well, you maybe airdrop the supply. You start allowing external parties to participate in the validation of the system, contributing to code. You eventually launch a virtual machine so that people can build applications on this platform that can service end users, right? Once again, because the point of this is to build a product people want to use and get the community to help contribute to this. And then once you achieve that, the last step is to achieve sufficient decentralization. And for Hyperliquid, what does that mean? It's like, okay, well, right now it's 16 validators all co-located in Tokyo, right? And that's the controversy. How do you actually get this to a number that we're all comfortable with? I don't know what that is. Maybe it's 40, 50, 100, 1,000. I have no idea. Where people are now feel safe that the counterparty risk of using this chain, the resiliency of this chain is on par with the leading smart contract platforms of today. And that's an open question, right? Will the product experience degrade when you're going from, like I said, 16 validators co-located in Tokyo to this global consensus with hundreds of validators potentially? And that's an open question. Now, how do I think about this from frame this opportunity is, once again, this is a process of progressive decentralization. This is a very young ecosystem. Literally, Hype launched a month and a half ago at this point. It just takes time, and as far as development wise, this may be 1-2 years behind Solana as far as its progress. And I think it's fine. It's fine for a project to not be perfect from day one. There was no projects that are perfect from day one. In fact, many projects have gone through pretty radical changes to get to where they are today. And for me, I would personally rather stomach the risk of progressive decentralization than stomach the risk of not prodding product market fit for any of these other smart contract platforms that may be more decentralized today, asterisk, but don't have anyone using them. And when I look at the field, because you're right, I don't really talk about many L1s beyond Solana and maybe Solana, Ethereum, and maybe Celestia, there's really not many that have any meaningful usage or any differentiated use cases. And that's concerning to me, because going back to what we talked about Solana and how it can fend off from competition, we're getting to a point where we have these established leaders that are really starting to compound growth. And they have this intricate web of assets and users and businesses that are all contributing to this compounding superstructure. And if you have a new blockchain that just doesn't have any usage and doesn't really offer a 10x improvement in scalability or functionality, then how is this ever going to compete? Like, we're kind of getting to a point where, as we said before, I'm like questioning how much room is there in the entire smart contract platform landscape. And if I'm going to make a bet, I'm going to make a bet on what I think is clearly has product market fit, in the absence of something that like clearly is like a 10x improvement in functionality, because I don't see that today. So yeah, that is the Hyperliquid opportunity. Now, how does it compare to Solana? I think they're just two different bets at this time. Like, Solana is very clearly on this Mount Rushmore of blockchains. I don't know, whatever a trio is, maybe Mount Rushmore is four, but Bitcoin, Ethereum, Solana, and it's just well on its path to being a really big thing. Whereas Hyperliquid is more an emerging opportunity. Near term, it's more of a competitor to the centralized exchanges, right? And you kind of can see this already. It's starting to win volumes from the Binances and all the other perpetual swap exchanges in the world. And that alone is a big opportunity and compelling opportunity. And then I think once you start to really get the EVM live and you start to see applications being built on top of it, and you can also get more color on how this is decentralized long term, that's when you can start to entertain it more as a potential competitor to Solana. But that is just a little bit further out.
Mm-hmm. I want to zoom in on this progressive decentralization idea a bit. It's a compelling one. I guess just my knee-jerk response is like, well, if product market fit precedes decentralization, why decentralize? Why not just be Binance? Like, clearly with a centralized platform, you can build a really good product that people want. So at that point, I don't know, what's the point of casting aspersions about decentralizing? Why not just be a centralized crypto platform?
Yeah, that's a great question. For me, I think it matters what are people using. This is maybe just more general answer, not necessarily about Hyperliquid. What are people using blockchains for today? And you can make the argument, just pure look into data, that, okay, you know what, there's this real stuff happening in parallel, like DePIN, DeFi, whatever. But when you look at the data, it's like people are just speculating on meme coins and trading perps, and that's kind of what people are doing today. And that is like the product market fit that many of these systems have. And for that, how much decentralization do you really need? Like, if you're just buying like some stupid meme coin or some dumb agent, I mean, do you really need the system to be decentralized? No, like, you're here to make money. But if we really start thinking about this long term, when we're not just flipping these shitcoins back and forth, but we're actually using these blockchains to settle like serious financial activity, like you have Apple issuing a bond on a blockchain for $100 billion, and you have governments participating in on-chain finance as well, then what level of decentralization is necessary so that the counterparty risk of using the system is low, and that the property rights that this system provides, as far as assurance that what you own is what you own, and what transaction have to pass has actually been settled, that really starts to matter. Like, really starts to matter. So why would you want to decentralize once you have product market fit? Is because, well, the next step is not just onboarding more people to trade meme coins and trade perps. That is a near-term step. And like I said, why I think even right now, like Hyperliquid is just positioned to steal flows from the centralized exchanges, that is a compelling opportunity in itself. But if you really want to actually get into this world where you're playing against Solana and Ethereum, and more broadly, those are trying to win share from global financial institutions and central banks, then yeah, you really need to make this like a product that people feel confident in using. And that is why it's necessary.
Mm-hmm. Interesting. Um, well, there's much more to get into, but Ryan, that is all the time we have for today. We battled through some technical difficulties, which is why I hope this episode isn't too short. But nevertheless, it's been very, very fun. I think a lot of value to our listeners from this one. So, Ryan, really appreciate you taking the time to come on.
Yeah, appreciate the time, Jack.
Absolutely. We'll have to have you again. Take care.